Hello, I'm Dr. Cheryl Dunn, here to demonstrate a problem in which you are given various pieces of financial data and are asked to calculate net income and operating cash flows and the ending cash balance for Boilerlakers, Inc. Take a look at the problem. Pause the video for as long as you need to read it. First, let's calculate net income. For this, we need to focus on what revenues were earned and what expenses were incurred, regardless of how much was collected or paid in cash. This follows the revenue recognition principle and the matching expense recognition principle to provide a more accurate report of profitability than is apparent from cash flows. First of all, Boilerlakers earned revenues of $300,000. The expenses that they had included cost of goods sold, which they gave us as $105,000. They also had salaries expense of $120,000. Rent expense of $18,000. Of $18,000. Interest expense of $3,600, and insurance expense of $7,000. And that $7,000 is calculated as 1 year of the 2-year policy, which cost $14,000. So $14,000 divided by 2 is $7,000. If we subtract all of these expenses from the revenues there, that leaves us $46,400, and that is including all of our expenses except for our tax expense. So we need to calculate this so we can then figure out how much tax expense we have so that we can figure out the bottom line net income. Our tax expense is going to be calculated as our income before tax multiplied by our tax rate, which in this case is given to us as 40%. And so if we take that $46,400 and we multiply it by 0.4, which is 40%, that's going to give us our tax expense of $18,560. And when we subtract that from the $46,400, that's going to leave us with net income of $27,840. So that's the first part of the problem, calculating net income. Next, let's isolate the cash flows to calculate the net operating cash flows for Boilerlakers. Of the $300,000 in revenues that Boilerlakers earned, $30,000 of that has not yet been collected. So that means the cash inflows from these revenues were $270,000. Of this $105,000 that we had in merchandise purchased, and keep in mind that cost of goods sold is $105,000 because we started with nothing. This was the first year of operations. We purchased $105,000 and we ended with zero in our inventory, and that's why the cost of goods sold was $105,000. Of those purchases, we didn't pay yet for $40,000 of them, so we still owe the vendors $40,000. That means that the cash outflow from these purchases that we made was $65,000. And so that's going to be an outflow, so we'll put it in parentheses so that it nets against the inflows. Of this $120,000 that we had in salaries expense, it says that we still owe the employees $12,000, and that means we had $108,000 that we actually paid in cash. So that was an operating cash outflow of $108,000. The full amount of the rent was a cash outflow, so we'll subtract the entire $18,000. Keep in mind that the owner contribution and the amounts that we borrowed, although those are cash flows, they are not operating cash flows. Rather, they are financing cash flows. So we're not going to include those in our calculation of the operating cash flows. We move to the interest expense. The interest expense was entirely a cash flow, so we subtract the entire $3,600. And for the insurance, although the expense was only $7,000, we actually had a cash outflow of $14,000 because we paid for 2 years worth of interest. So we had an operating cash flow of $14,000. We haven't paid any cash yet for the income tax expense, so we don't have to subtract anything for that. And so if we net all these together, we have a net operating cash inflow of $61,400. So this is our net operating cash inflow, because our inflow of $270,000 was greater than our total outflows, which totaled up to $208,600, giving us a net inflow of $61,400. Finally, let's calculate the ending cash balance for Boilerlakers, Inc. Beginning cash was 0. Then we look at our cash inflows. We'll first put in the operating cash inflow, which we said was $61,400. Then we'll look at any investing cash flows that we had. In this case, we weren't given any information about any investing cash flows, so we ignore those. And then we look at the financing cash inflows. Which we said is what our owner contributions and our borrowings are. And so we're going to add in the financing cash flow for the owner contribution of $10,000 and for the amount borrowed of $60,000. And that will give us a total of $131,400 as our ending cash balance. So there you see the 3 different perspectives of the Boilerlakers' performance in its first year. Its overall cash position, they have $131,400, is great. It has plenty of cash on hand. Most of that cash on hand, though, is the result of financing cash flows. Its net operating cash flows are still reasonably high, but if it had paid its accounts payable and its taxes payable, that number would have been much closer to the net income, which is still positive, but paints a much more conservative picture. Thank you for viewing this demonstration, and have a wonderful day.